Hey everybody, what's up? This is Rudy Bester. Some of you may remember me from my blog, which was Bester Investor, which had millions and millions, nah, I'm just kidding, which had like hundreds and hundreds of readers. And I realized people don't really read blogs anymore, they prefer to watch videos. So I figured I may as well get into the modern era myself and put some of my Bester Investor information onto video. And what's better than to start with the most current thing first? So I'm going to go with Occidental Petroleum Corporation because they just announced a distribution of warrants to purchase common stock. So let's take a look at what this means. But before we take a look at what it means, I need to remind you that my video is not investment advice. In fact, if you really, really think about it, my videos are primarily created for entertainment purposes, or at best maybe for your information, but it's absolutely not investment advice. In fact, if you think my videos are investment advice and you act according to my uh, information shared, you're probably going to lose all your money. And don't blame me, okay, because I just told you that this is not investment advice. Let's take a look here at what Oxy is going on about and what happened. So Houston, June 26, which was last Friday. Today is July the 2nd. Oxy announced that its board of directors has declared a distribution to holders of its common stock of warrants to purchase additional shares of common stock. What does that mean? Okay, we'll get into that in a second. I'll explain it in a minute. But holders of Occidental common stock will achieve 1/8 of a warrant for every share of common stock that they hold. Or if you flip that the other way around, you could say for every 8 shares of Occidental that you own, if you long Occidental, which means you own the shares, and you have 8 shares, you're going to get 1 warrant. And what will that do? Every warrant will entitle you to purchase 1 share of Occidental in the future for a purchase price of $22 per share. The distribution of warrants will be made on August the 3rd, 2020, so that's about a month from today, to stockholders on record as of July the 6th, 2020. So if you own Occidental today and you own it before or by July the 6th, you will be entitled to receive a distribution of warrants. If you do not own Occidental by July the 6th, you will receive nothing. And the warrants have a term of 7 years. So you have the basic requirements for a derivative instrument. You have a strike price of $22 and you have a term of 7 years. And what you have is a derived future value, that's why it's called a derivative, of whatever the Occidental share price might be at some time in the future, which obviously as of today we don't know, and no one has a crystal ball, so nobody is going to be able to guess what that might look like in the future. $22 per share for 7 years, that's the warrant. So what does this mean to a individual investor in Occidental stock? So, of course, as I said, investors who have warrants will be able to purchase shares of common stock for $22. Now, remember today, I said it's July the 2nd, Occidental is trading at around $18. So, receiving a warrant today valued at $22 in terms of an exercise price is rather meaningless because it's above the actual price on the open market. So, if you wanted Occidental, you could just buy it for $18 today. And we will receive a warrant for every 8 shares that we hold of Occidental. So as an Occidental investor, I own approximately 2,800 shares of Occidental. And because I have 2,800 shares of Occidental divided by 8, that would be 350 warrants. So I would receive 350 warrants that will entitle me to purchase 1 share for each warrant at a common stock price of $22 per share. So now what happens? If you sort of explore the concepts, there's sort of 2 ways that it can go. If by 2027 Occidental is trading below $22, then the warrants would be underwater and effectively worthless, so meaningless in that regard. However, on the other hand, if you're optimistic and you say by 2027 Occidental might be trading at $50 per share, then if you exercise your warrants to that entitle you to purchase 1 share of Occidental for $22, you'd be buying a $50 share for $22, and effectively you would make a gain of $28 at the time of execution. You could also view it very optimistically and say, what if Oxy trades at $1,000 a share? Well, the good news is then you've hit the jackpot because you can still buy it for $22 per share whenever you choose to exercise that warrant. Or alternatively, Occidental may go bankrupt, or it might be trading at $5 a share, in which case your warrants are effectively worth nothing or very little. Carl Icahn is a major shareholder. He owns about 10% of Occidental. He said, quote, "I am glad that at this juncture the entire board as well as management is committed to enhancing shareholder value, and I look forward to seeing the company's continued progress in this area." End quote. Carl Icahn owns approximately 10% of Occidental. So if he, as a major shareholder, is happy with this issuance of and potential distribution of warrants, then I guess I can be too, because it makes sense, right? If we look at Occidental over the past 20 years, it's not the greatest picture, but at the same time, it's not bad. It just depends sort of where you're coming from. If we look over here, you'll see I drew a cross, which is around maybe September, October of 2003, and Oxy was trading at about $18 a share, and today Oxy is trading at about $18 per share. That's kind of what happened to Occidental in 17 years. It's right back where it started from, sort of $18 to $18. However, in between, it had some very significant upticks. At one stage, it was trading at over $100 a share, and some downdrafts, including the most recent crash when the energy market pretty much just collapsed and oil became less expensive than free for a short period of time. So Oxy does have the potential to get up into the higher numbers again, certainly even up to $100 from its $20 current price range. But we don't know because no one has a crystal ball, so we can't predict that, and we have to play the hand that we dealt, right? But it does give you a sort of an interesting perspective on where your investment may go. If we look at Oxy's profitability, we'll notice that its gross margin, and what you have on this slide over here is you have a comparison of Oxy, which is the gray block, to its industry average, which is the little vertical black line. You'll see Oxy's gross margin is way above the industry average. TTM means trailing 12 months. So for the past 12 months, Oxy's been doing better than the industry average. The operating profit and net margin, on the other hand, is lagging a little. So Oxy needs to do a better job of managing its operational costs. It probably can do a great job merging some of those acquisitions it acquired recently with Anadarko, because these two massive oil giants do not need two accounting departments, two marketing departments, two sales departments, etc. So there's some significant savings that can be created out of the integration of the assets that were recently acquired. If you look at Occidental's growth rate analysis, so in this particular slide is quite interesting because we're looking at its growth, and the earnings per share growth, MRQ means most recent quarter and TTM means trailing 12 months. And you see Oxy is pretty much in line with its peers who, to be fair, collectively have not been performing very well. However, from a revenue growth point of view, both for its most recent quarter and for the trailing 12 months, Oxy has outperformed its peers significantly. What's interesting here is that Oxy is a massive driller, and it generates an enormous amount of oil when it drills. So when the stock price, when the price for a barrel of oil moves from $30 to $31, $32, $33, that equates to billions and billions of revenue for Occidental, which is one of the largest drillers in the world. One of the areas of concern with Occidental is debt. You'll notice here that Oxy has a debt to capital ratio which is not in its favor. Oxy's debt is about 55, its industry is less than 40. It's had a large change in debt as well. Of course, that includes Warren Buffett writing a check on behalf of Berkshire Hathaway to help Occidental finance the deal with for the acquisition of Anadarko. Maybe for a next video we can take a look at that acquisition. It's an interesting case study on its own. What is neat though is the quick ratio. Anytime you have a quick ratio of 1 or greater than 1, that means the company has enough cash or cash equivalents to be able to cover its liabilities and short-term debt, which is a good position for Oxy to be in. I'm going to wrap up this video at this stage, and what I'm going to do is just give you a couple of connection points so that we can get connected and we can follow each other. You can find me on LinkedIn at Rudy Bester, or otherwise, if you're on Twitter or Parler, which is the new version of Twitter, you'll find me at Rudy Best. I have the same handle on both of those. Twitter is a bit of a mess with all the noise pollution and politics and hate and all that kind of stuff going around. But if you manage to work your way through all the pollution, you can find some real beautiful nuggets of information on Twitter. You can email me at rudy@memorytrees.co. Memory Trees is my family's charitable foundation, and also affiliated with MTC Equity Partners, which is our Opportunity Zone fund that seeks to allocate capital into distressed areas across the United States. And if you're on Facebook, you should probably delete Facebook. Anyway, I've just given you 3 ways to get hold of me and connect with me, which is far better than Facebook, which I don't actually know what purpose Facebook serves anymore, other than to show people your new shoes or your food that you just had for lunch. Anyway, what you can also do, which would be really nice and appreciated, is like the video, give it a thumbs up if you did enjoy it. You can subscribe so that you can see more as I release them. And feel free to comment. I'll see if I can reply to as many of your comments as possible. And I look forward to building up a neat group of like-minded people to explore investments with us. On LinkedIn, I also have a group called Stock Option Connection Group that has about 1,500 members, so you can connect with me through that group as well. Anyway, until next time, this is Rudy Bester signing off. Cheers. Have a good day. Bye-bye.